right, well, welcome back. Today I want to cover two sheets that I built, both for the same purpose, but they're a little bit different, and you can kind of choose which one to use if you so choose to download them. This is the crypto ladder out process. If you invest in a cryptocurrency and you want to not buy it, hold on to it, hits a price, sell it, that's just in, out, done. This is a ladder out process, and usually a little bit longer term time frame that you're going to be working with this. Let's see here. The way I would explain it is you put your money in, you get in position, you have a coin, you've invested in it, and you're sitting on it, and now you've done all your research, and you have figured out, let's just say, that this is going to grow really well over time, but you have no idea where it's going to end up. So you're not trying to time the top of a market, because that's impossible. You're never going to time the perfect top. You're never going to time the perfect bottom. So you just are not going to. And if you get lucky to do so, count your stars. So here's where it goes. You put your money in, and let's say that we're going to use some very general terms here, general time frames and some dummy data, and we're just going to pretend to kind of illuminate exactly what it is I'm trying to say. So let's say you bought a position in a coin, let's say Ethereum, and you bought it in 2020 for, let's say you bought it for $100, which was actually possible in March of last year. I believe it got down to 96, 98. Now it's 3,500 or whatever today. So you bought it in 2020 for $100 per token. You put in you put in $10,000. You got you got your coins. You're sitting there and you got your money in. Now. You have no idea where it's going to go. You don't know if it's going to, over time, is it going to go up and go down and go past where you bought it? Is it going to go up and moonshot? You just don't know. So what you want to do is you want to lock in your profits, because a lot of people talk about how big their portfolio is, but your portfolio is nothing more than unrealized profits if it's in the positive. If you're in the, if you're looking at your portfolio and you're like, wow, I put in, $5,000 and today it's worth 120 grand. It's worth 120 grand, but you haven't cashed out yet. So it's not worth anything to you in your bank account. So you cannot really pay attention to that part of it. What you have to have is some kind of strategy to be able to take your profits, because this market is going to go up, and it's going to go significantly higher than where it is right now. Everybody pretty much knows that. And if there's a million reasons why everyone knows that's going to happen. Just take a look around. Number two, it is going to go back down. It's going to retrace. If you look at history, and that's the best indicator, the last three halvings by Bitcoin will show you the cycles and how it works. I mean, we're talking Bitcoin's had 80% pullbacks. The altcoin market has had 90% plus pullbacks off of its ride high. So you have to be prepared that this October, November, December, maybe January, February, I'm not sure, who knows. But when this entire market decides to take a breather, a big breather, and the bull run slows down, there's going to be some retracements in terms of, well, the retracement is going to be a massive pullback or a lot of profit taking, because a lot of people are getting wealthy like never before. So it's going to happen, and people are going to want to realize their gains. So what the ladder process is that I've created for myself based on a lot of information out there in the crypto community is the one thing I've learned, and it's probably just a general investment community kind of mentality, and that is you got to get in, but you got to get out to realize your profit. And the way that I've put it together is a money in, ladder out. So let me show you really quick what I'm talking about here. So I've got two different, and I'm going to have to pump these up a little bit, make them bigger to be seen. So I've got two very distinct little sheets that I've created for myself here. And I want to just kind of show what I'm talking about here. So we'll start with this one. It's really simple. If you have a long position, you're using this one. If you have a short position, you're using this one. Long position for me is 3 months or longer. 6 months, let me take that back. In this market, I'm looking at 9 to 12 months, 18 months, 2 years, 3 years, 5 years, 10 years. Those are all long positions. A short position is 90 days, 60 days, 30 days, 180 days. It could be a year, depending on what it's related to, but so longer term positions, I'm going to set it, forget it, but I want to get out of it eventually, and I'm going to keep my eye on it. This is the one you would use. And the only thing that changes between this sheet, and which one you decide to use per coin's involvement, and I'll show you that here in a second. The only thing that changes is the price multiplier right here. This right here. This is the only thing that changes. On a long-term hold, I'm going to wait until the price multiplier is 10x, 25x, 100x. This is not actually my strategy. I'm just using the numbers to illuminate the situation at hand to show the difference between the two. The short position would be a 3x, a 5x, a 10x. So my max on a short position is the beginning of my long position ladder out. So the end of my ladder out is 10 on a short. My entrance, my first ladder out on a long is 10. I'm really holding on for the big hit. Now, you choose what you want to do. I just created two different color-coded ones to show the difference. What doesn't change is how I ladder out at all. The method is exactly the same. Does not matter. The only thing that changes is the price multiplier. So let me just show you a really quick example. Let me see if I have one here. So let me pump this up real quick. Let's go with some dummy data. And this will kind of illuminate really well what's going on here. So right here, now this sheet is the live feed sheet. This sheet right here, not this one. Let me see, where's it at? This one does not have any live data at all. It's basically all analog offline. Now, and that's right here. You just go here, data queries. It's going to come up over here. And you're going to see that I have all this information being pulled in from the internet live. So you're getting this is actually the coin price. If I refresh it, data right here, refresh all, this price 55897 should change. 56444. So it changed. It's live data. Okay. So this is the feed, and this, you don't ever touch this. Once you put it in, you just let it be. And it always comes in this way with the way I do it. And that's why on the template, I say reserve this many columns right here for that feed to come in right here. Because if you put something underneath it, it'll shrink all your stuff over here. It'll mess it all up. So you just go to J, from A to J, and then start at K and paste in. Like if you wanted to make a new sheet, you would just copy this. Okay, so now I have this one. I'm going to create a new coin over here. So I'm going to go A to J. And I'm going to say, nope, we're going to start right. And let's say you just want to put it down here. It doesn't matter. Just put it right here. Boom. So now you have A to J is nice and safe because that's where you're going to bring in your data query, which I could, if you guys want to see how to do that, if anyone wants to see me do that, then I can show how to do that. Otherwise, I'll just assume people know how to do it. So back to the situation at hand. So on the 18th, all dummy data, on the 18th, 2020, over at Coinbase, I bought this many coins. This was the price. This was the fee. This is how much I spent. This is how many coins that I have. I got 00488 coins. The current price is 56444, 56444. The current market value is now 275.67. My profit and loss is 227.66. So I've gained 230 bucks almost. I have not realized any profit yet. Because I haven't sold, and I haven't taken out any of my taxes yet because I didn't sell anything. So there's no profit, and I haven't closed out this position. So my rule stays the same. So what I do is I say, okay, cash out proceeds. When the price hits 98,300, I can cash out my proceeds, and I'm telling myself I'm going to sell 70% of my coins when this number hits. So 98,000 is 10x from the 9830 that I bought it for. And as you can see, we're halfway there. So once it gets to 98,000 on this particular scenario, I can then sell this many coins, 0.00342. I can sell that many tokens right there. I can sell that many. Why? Because that's 70% of this number right here, 0.0049. So 70% of that amount of coins that I bought is this number right here. And I will take that amount of coins. I will go over to my exchange and I will transact and sell that many tokens, get that profit, and put it where I put it. So when you do that, you annotate it. And let's just say we actually did that today. 5/6/2021. I sold 0.00342. That's how many tokens I sold. And the price was, let's say 56,444. 56,444. Got it. Boom. So my total cash out was 193.04. The cost of my coins that I sold was 33.62. My profit and loss, my executed profit and loss was 159.52. The scalp 39.85 was taken out. I have a total profit of 119.56 to put in my pocket. That's what happened. So you just do it again. So now you can see, now if you come up here, now you're starting to see some math being done here. How many coins have I sold? How many coins do I have left versus how many I bought? I only have 00146 left. I had 0049. Now I have this. So then it's just going to continue to show you what your realized and unrealized profit is, or what your current P&L is, what have you done. So it's just keeping track of all of your movement. Now, you're waiting for number 2 and number 3. So I'm waiting for the next price that I can execute 20% of whatever my total tokens were, not this number. So now I'm going to sell 00098 because that's 20% of 0049 right here. Okay. Now I have to wait till the price gets to 245,000. Then I can sell the final 10% of my moon bag, and when it hits to $983,000, which will probably be in about 5 years, hopefully. So when this hits, or close to it, plus or minus a percent or so, boom, I transact. I go do the transaction, and I annotate the actual transaction because it's never going to be exact what you figured. So this is an example, and this is based on the sheet right here is per coin. So Bitcoin, Ethereum, XRP, Chainlink, EOS, Algorand, Tezos, Cardano, Stellar. Every coin gets its own sheet because this right here, this data query, creates a sheet for you to place this data feed in. So why not just use the sheet that they create for you and go over here to the current template, grab which one it is you want to use for this coin on this day, and go into a position and paste it in right here at K. Boom, drop it in. And when you want to do another buy of Bitcoin on another day, do it again. You want to do another one? Do it again. You want to do another one? Do it again and again and again. Whether it's a long term, a short term, it doesn't matter. You have both of the templates right here. You can keep track of it. You know, whatever color you make it is for short, whatever color you make is for long. You can change your multipliers in here and all the math will change. So that's the way I built this sheet. The next sheet that I built was this one. I'm just going to read this off one time, and it kind of explains how I look at it no matter what sheet I'm using, because it's just the basic knowledge of market caps and how I deal with what price I'm looking to, how I'm looking to ladder out. Whatever I think the total market cap for a coin is, let's say $1 trillion, I think that the coin is going to have $1 trillion invested in it. Then just divide the total amount of XYZ coin, and you get an idea of the possible price of XYZ coin. So, what I have an example here of a quadrillion, but max coin supply. So you would just take this number, project market cap, divided by the max supply of coins that they're ever going to mint. This is what you think it's going to be, and this is how many coins they're ever going to mint, and then you get a final total possible general price of the coin. So you're not sitting there looking at a token going, I think this token is going to go to $500 million. No, actually it's going to go to $22.20 based on real math. And then from there it's going to go down. It's never going to exactly hit that. It could go way above it, not way above it, but math is math. How many coins are in circulation and how much money has been spent on the tokens equals what the market cap is. And the market cap can only go but so high for so long until all of them are bought up. Then after that happens, that's your max. After that, then you're talking zero available scarcity. So then you have the situation like Bitcoin, where at some point in the future, 2142, every Bitcoin will have ever been minted. There'll never be another one minted again when it hits 21,000,000,000. So now there's 21 million tokens in circulation. Now it's a perceived value issue. Now it's a whole different situation. We're not there yet on any situation where every single coin in circulation has already been bought. for the most part, because if that's the case, they just keep minting more of those type of coins, and that's a different methodology. But so for a moon bag, and when you hear this from people and the terminology gets thrown around, I got my moon bag saved. The amount of coins I preserve for the possibility of the coin price to blow past the projected price cap based on my above formula. My moon bag is always 10% of my overall coins bought per position taken. So back over there to the other sheet, every time I plug in another position with a grid, that's a position. I bought coins today, I'm going to ladder out over time. Okay, I bought some more coins, I'm going to ladder those out over time. It's the same token, but they're different positions of the token. So memorialized in time, I've done it here, I'll ladder them out this way. I've done this one here, does not relate to this one. It's its own little thing. Per position I buy per coin, I always take 10% of my purchase of coins, and I absolutely offline cold wallet, hard hold, never going to sell them until there's just staring in my face the reality that it's never going to go higher, so sell them and make your profit. That's a moon bag. The way I use the sheet per coin, again, here, and then you got more sheets here, is the way this sheet works is you have your position. What coin? XRP. On this date, the price was $3. You're just data entering because there's no live price feed here, so you're taking your actual screen or whatever you use to get your coins, and you're looking at your transaction data from Coinbase or wherever, and you just went and bought some tokens. Now you come here and annotate it. And the annotation is, I bought this coin on this date at this price. This is how much money I spent to get in position. This is how many coins I now have of this token. So here's what I'm going to do with this position. I'm going to take 2x right here. 4x. I put 4. I change these, but here's the rule. Here's what I do based on information. So you can change it if you want to. Like, not 5, let's go 4. You'll feel it. So you can follow along with this, create whatever numbers you want. These are just numbers I use, and sometimes I change them just based on looking at different scenarios. What would it look like if? So when the price of the coin 2x's, which is $6 from $3, then I'm going to sell 10% of my tokens. The number of coins that I'm going to sell is 33.33. 10% of this is that. The coins I'm going to have remaining is this minus that, so I've got 300 left, and I'm going to profit on that one 10% out transaction, $200. I'm in 1,000. I only have 800 more to go to get healthy, to get back to zero of my money in the market, and now I'm playing with house money. Here comes the next one, and this is where you can start fudging with it. You can fudge it anywhere you want, but at a 4, now you're waiting for it to go up 4x. So now you're just sitting around, and now the price of XRP went to $12. Okay, I'm going to bang out 30% of my tokens. That's 100 of them now I'm going to sell. I have 200 left, and I just pulled out $1,200. So 12 and 2 is $1,400. You were only in for 1,000. You're up $400 minus fees and taxes. So you're almost broke even right there. I don't do the math on the fees and the taxes. You can do all that stuff yourself. It's not that hard, and we all know that. So I didn't waste your time with showing you that. Now, you still have X amount of tokens left. So here we go. You still got to ladder all the way out. Remember, this last one right here, this is the moonshot. You're probably never going to get to it, or if you do, God bless. So the next time it goes up to 7x. Now XRP is $21. Now you're going to sell 20% more of your holdings, 66.67 of your coins. You have 133 left. Now you just made $1,400 on that single transaction, and so on, and so on, and so on. And if you ever get down to this right here, you have a $300 price point on the token. You have 10% left in your moon bag. You sell the 33.33 tokens you had left, and you pulled out $10,000 in the total. If it all goes your way, you will have pulled out $17,050 off of your $1,000 investment. You 17x'd your money, which has happened hundreds of times this bull run with hundreds of different tokens, hundreds of different multiples of it. It's ridiculous how many people are Xing their coins. It's disgusting. So this is absolutely very possible. And matter of fact, it's already happened and happening. So this is all real. This isn't pie in the sky. People don't believe this could ever happen. I dare you to go take a look and see what's been going on. Yes, it is happening, and it's happening a lot. 10x, if you're playing your cards right, is normal in this bull run. I'm not a financial advisor. I am not telling you what to do. I'm just saying this is what it is. So that's this sheet. And then what I just do is I take this sheet right here and I copy it, and I come over, and whatever coin I'm coming into for the first time, I would just go to this blank sheet and go here, rename the sheet right here, rename the sheet, and start plugging in your data. And then now this coin gets another sheet underneath it if you happen to do another position in that same coin, and then another one, and then another one. You just keep going back to the sample and keep copying it and pasting it wherever you want, however many times you want, as many times as you need to. So that's all I wanted to show today, was the difference between the two different type of ladder route systems I use. I do use both for different reasons. Go to luxitam.com, check the link in the description below. You go to tools, and there they'll be, because I'm going to have to upload this, and a few others. So I hope this was helpful. Again, nothing too crazy math-wise, nothing too crazy formulaically. Is that a word? So formulas are just basic math, basically. I try to keep it as simple as possible, as I've said before. I hope this helps you out. You have a great day. See you in the next one.